across. Okay, let me ask you another question. There seems to be this feeling that insurers are always looking for ways to not pay out, right? So in the T's and C's, they've got requirements in there which are in not just small print, but the small print of the small print, which people fail to read. So that if a claim is to be made, then the insurers are saying, "Ha, we got you out, we caught you out. Look at that small print and look at the small print of the small print. You'll notice that because of this, and this reason, if you haven't got that in place, we're not paying you out." What's the reality? Is there a reluctance from the insurers to actually pay out, or and I know you're in the insurance industry, so be open and honest. And for the tell them what the reality is.
I spent 8 years as a loss adjuster, and 6 out of them 8 years I spent as a fraud officer working for the insurance industry, tackling insurance fraud. Now, there is a myth. However, you have a duty to disclose all material facts. So when you get insured, the questions that you answer to get that insurance cover are known as indemnity questions. And in them questions, they will ask you certain things about previous claims, about any bankruptcies, about any criminal convictions. If it's a property policy, they will ask you about the construction of the property, about flat roofs. And amazingly, as an insurance broker and as an investigator, I have found 9 out of 10, the clients don't supply the correct information. Now, if your information is airtight, then you've left the insurer no choice but to make that settlement. However, if you haven't declared something, and I find, there's always a pattern. There's certain questions which are answered incorrectly in an attempt to bring the premium down.
What kind of questions are those?
Have you had a criminal conviction? Like if it's a car policy, have you had points? Have you had claims in the last 5 years? If it's a property policy, is there a flat roof? Are you in a flooding area? And what happens is the information is all readily available to the insurers anyway, but you have a duty of care to disclose all material facts. Now, if you're not entirely honest and truthful, you've given them ammunition to reject your claim. Now, in the days where I was a fraud investigator, I was dealing with a lot of car crime and a lot of car claims. And you can tell a contrived accident. You go and interview one witness and you know that this accident is contrived, yet we still try and get the claim through. But when we actually look at the policy itself and look at the indemnity part of the policy, we find that the policyholders had previous accidents, which they failed to disclose on their insurance application.
Right. Okay.
So as long as we are upfront and honest about everything, you leave the insurer with no choice but to make that settlement. Now, currently we have in excess of about 300-400 claims within the business of our clients making claims. Now, as long as everything as long as the information that is supplied is correct, the insurers have no choice but to pay. And if they don't pay in them circumstances, then there's channels and there's ways that you could pursue them. But what I find is all very well, it's easy to blame the insurer. But when you look a bit deeper, it's not always the insurer's fault. And I've dealt with many clients who've rung me up, I've had this problem, I've had that problem, and your heart goes out to them, and you want to help them. But the minute you start going a bit deeper, you think, hang on, sunshine, you weren't entirely correct at the time of inception. It's no point blaming them now, because had you been upfront, and also, when you don't disclose the information, there's no point taking that policy out. It's just like giving yourself a false sense of protection when you've got a policy which isn't worth the piece of paper it's written on.
True. So in terms of the common things that people do to try and get lower insurance, what are the things which they need to be very mindful of to make sure that they've disclosed, which they may not otherwise?
The thing is, if you decided to take out insurance, if you have an asset that you want to protect, if you have a business that you want to protect, just be honest. And if there's any questions that you don't know the answers for, go and get them. If you're asking me for your turnover, or if you're asking you for your payroll, or if you're asking you something, go to your accountant, get the figures correct. Because if your figures don't match up, like I'll give you an example. I had a client who had a mobile accessories phone shop, and his contents he declared at a certain value. My opinion was that he had more contents in there, but he said, no, this is the value I want, and I'm happy with that. Unfortunately, there was a claim.
Right.
There was a claim, and when the loss adjuster came in, the loss adjuster said, well, you're saying that your contents value is a certain value. However, by my calculations, your contents were worth a lot more. So they offered him a settlement of the figure that he had disclosed, and the amount that he was underinsured for, they took away that percentage.
Right. Okay.
So overinsuring and underinsuring is also a problem. If you know that you have certain contents in your shop, in your in your business, you've got 40, 50 grand of stock or contents in your business, declare it, because otherwise there's no point getting insured. If you're going to get insured wrong, there's just no point of getting insured. And we do see this a lot where, I mean, we see this a lot with landlords who want their property insured for millions, whereas the rebuild value is only about 200K. Now, again, that's a massive overinsurance, and in the event of a claim, you will get penalized for that. And when it comes to business policies, we want to show less contents or less stock in an attempt to get a cheaper premium. You will get penalized for that.
How, in terms of being penalized, how does that look?
So, for example, if you declared your stock at 25K, okay, in your stock, and the loss adjuster establishes that your stock was actually worth 50K, means you are 50%.
Same example as the phone shop that you,
It means you are 50% underinsured. So what they will do in that instance is pay you the 25 grand, take away 50% from that, which means you're left with 12.5 grand.
Okay. So that's obviously the penalizing of somebody who's underinsured. So in terms of somebody
overinsured as well, if you're overinsured as well, it means that you've tried to. 1 second, we have this technical issue every Sunday. 1 second. So I'm in serviced offices where the lights on a timer for 20 minutes. If there's no movement in the office, the light switch off.
You need to stop moving and do some, shadow boxing or something.
So when it comes to overinsurance, the same rule applies. They will penalize you the percentage that you were overinsured for.